Do you really think you'll learn and grow and achieve without failing? Maxime Lagacé. My friends, failing is not anything you need to be afraid of. Why? Because you're going to be practice trading as you learn this craft. 10 to 15 minutes a day, that's all the time we ask for from your schedule, but it needs to be every day the market is open. Why? You've got to learn the nuances. You've got to learn the ins and outs, the little things that mean so much in being able to accurately follow stock trends. Now let's jump into these charts and see where things are today. We look at the S&P 500. Well, everything is down for the day, but Bitcoin, we'll get to that in the end. So what do we see as we look at these charts? We had a weekly vertical crossover back on the week ending Friday the 26th of February. Remember, all weekly vertical crossovers occur at the end of a week. Any particular week where there is a weekly vertical crossovers, we see those occur occasionally, and we look for big action when those things happen. Now the chart's down for the day, and oops, you know what's happening? I'm in the post market. I'm switching that over. The only place that really shows up is when you get to the smaller chart if you're in post market. Now I'm using TC2000 for those of you who don't follow the channel on a regular basis. This is the trading platform that we use. It is both web-based and you can download versions of it. I use the web-based, so no matter where I am in the world, I can simply log in and boom, I have my charts. This is the layout that we use at Free Stock Charts. Well, it's the layout that we use here at chartingwealth.com. We originally started on freestockcharts.com and transitioned over TC2000. This is our TC2000 layout. When you subscribe, if you'll follow the link in the show notes, you will get a discount of $25 off your subscription. Plus, there's a link there for these exact charts that we use. For those of you who don't use TC2000, here's the indicator setup. People write me all the time wanting to know what our indicator setups are. I'm like, well, do you follow the show? They're right there on the screen. The two big ones are the price percent oscillator at 10 and 24 and derivative oscillator at 14, 5, 3, and 9. Nothing secret about that. We set that up with an exponential moving average of an 8 period on all of our charts, and Heiken Ashi candlesticks and Bollinger Bands. And you can see the settings on the Bollinger Bands. And you can see the moving averages that we use. Now, how do we see this week starting off? Green solid spinning top means, again, a slowdown in that down movement from last week because we had so much volatility there, if you look. And what do we see happening? Well, price continuing, price percent oscillator, same rate continuing to move down, derivative oscillator moving down, 2-day chart. Same. When we see the price percent oscillator and derivative oscillator, again, lots of volatility on that last 2-day candle representing Thursday and Friday. Monday, not as much. Green open spinning top. And again, price right there on the 2-day trend line. We'll see how the rest of the week goes. Again, I always ask that question, how long are you going to stay in a trade? How have you set up your profit and loss bands? If you don't know what profit and loss bands are, you hadn't been with us for a while. I release that training quite often to our subscribers. How do you become a subscriber? You go for free and sign up at chartingwealth.com. You get the daily reviews every day, the weekly review and forecast once a week on Friday at the close of the market. We record that. You get our trade worksheet, daily market worksheet, weekly market worksheet. All those PDFs are in your show notes every day, plus the special trainings. Today's special training for you is how we use complexity theory in investing and trading. A good one. Hope you like it. So we look at this 2-day, first day of the latest 2-day candle. Again, setting up, going same direction. That's good. What about the half day? We can see where things jammed up in the morning and then blew that off in the afternoon, like we said, down for the day about 0.5%. But again, not enough energy for that half day to cross over. Very interesting how it just died at the end of the day and in fact ended up with a down day. So again, things showing continued weakness on our big chart and our intermediate chart, continuing to move. Okay, down. Now let's go to the Qs, the NASDAQ 100, the big down. We had that weekly vertical crossover going down. Likewise, back on the 26th of February, And look at it continuing to trundle down hard. Still haven't hit the low. Well, still haven't. It's just Monday. Haven't hit the low of last week yet. Look at that price percent oscillator actually jamming over about the same angle, maybe a little more. Derivative oscillator gaining momentum. 2-day chart. Again, we can see first day of this latest 2-day candle continuing to move down strongly. Derivative oscillator gaining downward momentum. Look at the half-day chart. We can see where things had sort of been rolling for a day and a half going into and through Monday morning, and then in the afternoon turning back over, heading down. Price percent oscillator chopping over. Derivative oscillator about flat. So looking good. Now we go from stocks, and again, down for the day, 2.83%. That's a big down day for the NASDAQ 100. How many of you all did that get you out finally on this down trade? Again, you don't have to get out. Not necessarily a lot of reasons to get out unless you hit your profits. So again, what can you do? We talk about that all the time. You can hit bifurcated or trifurcated profit levels. Those can be, 2% you sell half, another percent you sell the other half, or maybe you split it into thirds. However, now those of you who are new that are looking at this saying something isn't adding up. This guy's talking about buying something that's going down. I'm not an idiot. I can see the red candles. What we're talking about are inverse plays. Whenever we start talking about things going down, we've added a little sophistication to that. On the Qs, the NASDAQ 100, there's something called PSQ. What is that? Well, that is the ProShares single short. They're double shorts, triple shorts, but this is an inverse fund. It is set up by the people that run it to actually mimic the exact opposite percentage-wise that the NASDAQ 100 is going down. This is going up. You can see that happening over the last 3 weeks. It's a different dollar amount, but it's set up to move in the same percentage that the underlying fund, that is the NASDAQ 100, goes down. Also, we have something called options. A put option is something that you buy when you see a stock or an ETF going down that actually has options that are sold on it. And of course, in this case, you can do a practice trade in options. Now, when I say practice trades, we're not a stock calling service, we're an education firm. We don't give trading advice. We want you to learn to trade with us. So everything we talk about is in the caveat of you practice trading. And of course, you'd be a fool to simply take money and start flushing it down a toilet. Give it to a charity rather than wasting it. Paper trade until you start getting very, very good. And then when you think you're good, go into fractional trading. That is where you put a small dollar amount and you see if you're actually being honest with yourself. It's easy to cheat with paper trading. When you start putting a small amount of money, say $100 in a fractional trade, and you see just how that goes, easy to keep up with your percentages and see if you actually know what you are doing. Okay, we're going to leave stocks, go to bonds. What do we see going on there? Bonds down for the day, 0.78%. We had that 2-day recross back many, many days ago. We'll talk about that in a minute when we get there. But look at the weekly. Continuing bonds, continuing to hammer down. We see the derivative oscillator gaining momentum. Price percent oscillator heading down. 2-day chart. Now again, we hit the lowest low recently back on the 2-day candle ending Thursday the 25th of February. Popped up a little after that and has slowly been devolving. Price percent oscillator steadily moving down. Derivative oscillator still losing downward momentum. What does that mean? The derivative oscillator is showing us when it peaked, you can see where the peak down move was, and then it moved up and then slowly trundling down. So over time, we're not having the increase of the increasing lower prices that we saw as things moved through this prior 10-day period, going from Thursday the 11th of February through Thursday the 25th of February. So again, what we are looking for is to still see the derivative oscillator stay in the red, and at some point, as the price acceleration, if it accelerates down, you'll see the derivative oscillator, which is a triple smooth version of the relative strength index. Those of you who understand relative strength index, You understand it is a leading indicator. And again, it will show us acceleration in strength in that price movement if and when it occurs. If it's not, it's showing us that it's slowing. Our king of indicators, though, is the lagging indicator, the price percent oscillator, which is, of course, the percentage version of the MACD, the moving average convergence divergence indicator, our king daddy indicator, which is beautiful. Again, got to have a market where things are moving for it to really, really be reliable. When things get sloppy, everything gets sloppy. Derivative oscillator and the price percent oscillator. That's when you don't have to trade that chart when it gets sloppy. You want it to go in your right direction. Now, of course, on this, we saw that 2-day recross that originally occurred back on the 3rd of February. And it's been so very good to us. But again, you need to have your profit and loss band set, and when you make your profit that you set for that trade, cash out. Cash out, take your profits, put that in the bank, and be happy with that successful practice trade. Lastly, we go to the half day. Still not enough energy to cross over going down. Why? Because we haven't really gone down to that low back on the afternoon of Thursday, the 25th of February. It popped up after that and has slowly been devolving. Hasn't hit that low yet. Maybe at some point, particularly as a derivative oscillator starts gaining downward momentum, that price percent oscillator will cross over. That's where we are on bonds. Let's go to gold. Look at gold down 1.04%. Lower low already this week. Moving down, derivative oscillator, price percent oscillator. Just continuing to hammer down. Look at this 2-day chart. We now have 4 candles. That is 7 days. This is just the first day of the latest 2-day candle, but again, lower low. Price percent oscillator going down, derivative oscillator going down. Half-day chart, what do we see there? Down in the morning and not quite so down in the afternoon. Derivative oscillator gaining momentum. Things are looking good. Okay, lastly, we go to Bitcoin. Bitcoin up for the day 6.33%. What's that about? Starting the week off with a green up candle. But look what's happening. Trying to cross through. Did it cross through? Yes, it has crossed through. Even starting the week off, the price percent oscillator crossing through the red signal line doesn't mean if it continues to go up for the week, it'll stay this way. This is the first day of the latest weekly candle. Derivative oscillator gaining downward momentum too. We'll keep our eye on things. Look at this 2-day chart. It is slowly losing some of that downward momentum, but derivative oscillator gaining downward momentum. We can see things again just sort of sliding along sideways. Half-day chart trying to cross over, but not enough energy in the afternoon on the price percent oscillator nor the derivative oscillator. We'll keep our eye on things and see how Bitcoin continues to develop. Still some weakness there. My friends, that's where we are as we end the day. Thank you for the book purchases over the weekend and for the new Patreon supporters. God bless you all. All the best from the whole team at Charting Wealth World Headquarters.